Everybody's getting excited that interest rates are starting to touch the fives. But you know what? I could care less. Because a lower rate on a 30-year fixed mortgage still means you're in a 30-year fixed mortgage. My name's Sean Uehara. I've been a mortgage lender for almost 20 years, and my team and I specialize in teaching you the First Lien HELOC. This is by far the best strategy that the banks do not want you to know. Realtors, loan officers, they don't know this strategy exists, so they won't teach it to you. But my team and I know this product inside and out, and we know that we can get you to financial freedom a lot faster than what you might think is possible. Many of our clients that use this strategy pay off their homes in less than 7 years. You use a HELOC just like you would a checking account. You rinse and repeat this process month in and month out. You pay your home off. Then you have access to this line of credit for 30 years. You turn yourself into the bank. You leverage this line of credit to buy more properties, start a business, do something that's going to help you build wealth today versus putting that little bit of cash away every month and hoping and praying in 30 years from now you've got enough money to retire. Here's a conversation from a client today looking to buy a brand new home. We're going to use our HELOC strategy on this purchase. He's going to put 10% down. Purchase price is $500. We're going to borrow $450, and I'm going to compare this to that 5.99 rate that I showed you earlier today that so many people are excited about. The take-home pay between him and his wife averages about $12,000 a month, and they've got another $50,000 between their checking, savings, and high-yield savings account, which we're going to reallocate into our HELOC. At the end of the month, after all the bills, food, groceries, and everything's covered, this guy's got about $3,600 left over. And you can see here, this is the 30-year fix at the 5.99 rate, which so many of you will gladly take and keep yourselves in debt forever. Here's what our client's going to do. We're going to pay this house off in 6.8 years, 82 months, and our strategy is going to save him $405,000 in interest. Average rate on our HELOC that we're using to model this scenario out is 7.6%, but the way that the interest is calculated on your HELOC is based off the average daily balance. So as you make your deposits into this account, you effectively lower your balance, which lowers your interest. And you can see here, our effective APR is only 1.5%. What that basically means is that the APR on your 30-year fix would have to equate to that 1.5% in order for it to cost the same. So many of you get caught up in this payment thing. What's the payment? What's my rate? You have to look at the overall cost to what your mortgage is costing you, which not many of you ever look at. And if you did, you look at your amortization schedule and see how much interest you're actually paying back on your mortgage. That's where the banks get you because not many of you ever look at that schedule. Basically like reading the fine print on anything that you buy. Herd of sheep, they're going to celebrate low interest rates any day of the week. What my clients are doing, we're celebrating getting out of debt quicker and building wealth today. In this guy's case, you can chase a 30-year fix at 5.9, or you can be out of your entire mortgage in less than 7 years. Interest rate is only the distraction.